Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, at present, the Australian dollar is putting on a brave challenge, and as the market looks back towards its recent rejection area around 67.1535. In light of the pattern, the technicals are weak, so I do feel that a little bit of caution should be given towards this top side in case of another rejection. It was heavily contested back here in February, and as the support crumbled to the resistance, it no doubt will find good resistance from this region, and if so, would expect to see a rejection and eventually turn back towards the bottom side of its range. First of all, seen around 66.45 and a short-term base coming in around 65.90.95. With all eyes on the Fed next week, the market is still somewhat a little bit hesitant as it takes the challenge towards the top side at present. Of course, the technicals are somewhat weak. I feel anywhere towards 106.45 or beyond to 106.85 to 107.15 would again find good resistance, and therefore look for a rejection and eventually see a market turn back to 105. In next week, it is anticipated that the market will see a 25 base point rate hike from the US Federal Reserve when it concludes its meeting on March the 22nd. Therefore, should see the dollar gain further momentum and capture the 104 to 105 and maybe on to 106. The market has been somewhat rushing back to safe haven recently due to the recent saga from the banks, with the US First Republic Bank now getting injected $30 billion to help restore itself and meet the demand for withdrawals. While also Credit Suisse was also a bit of a nerve-biting situation, but the Swiss National Bank has also given some confidence there as well. As we can see, there is a bullish hammer in play after the rejection from that bottom side key level of 132.0525. Any return there would again expect to see the market stage another rebound after we have seen 3 and 4 is anticipated, and therefore eventually see the market take the challenge back towards that top side level of 134.6070. Sterling still whipsawed and looking for direction, even though the market is placing a lot of noise in its movement. Now looks towards that top side level around 121.65. I feel from there we'll struggle again and could see another downturn and look back towards the lower side of the range of 120.30 and reassess. I feel there is a bit of a squeeze coming into play here for gold as the market is now looking back towards 1,929.36. As we can see back here in January, the market was very whipsawed and posted a key reversal, and also from that the engulfing candle gave us a moderate downtrend back towards 1,800. In light of the snap to the upside and safe haven demand increasing, the spotlight will be on the Fed next week, and with 25 base point expected, I feel the market might be a little bit wobbly up at this top side level and maybe even seeing the squeeze revert or be negated and eventually see the market down test back towards 1,884 to 85. We're seeing a little bit more momentum coming back into oil after sitting on the sidelines for the last 36 hours. We've got a dragonfly doji that's giving us a little bit of guidance to the upside. If the market can clear the level around 70.5, which is still quite a way, could see a move up towards 72.5. But there is still a lot of work to do on the upside to reverse this current heavy negative price action that we've seen. But with the dragonfly doji, as I mentioned, has given a little bit of encouragement to the bulls. Let's see if it can continue. Well, that wraps it for the week. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.